What I'm about to share with you is quite shocking. Just imagine where the crisis lies today, and I will give you the facts supporting the evidence that we now have the weakest link. I'm going to break it all down. First things first, though, we got to understand where the people are at, where the consumer is at, because the economy relies on it. And then we will see how the pieces connect. All of this will be displayed for you here. I want you to pay attention. It is extremely important to notice what's happening with commercial real estate, with consumers and what they're buying. And now something has changed with the consumer patterns that you've got to know about. This has not happened for years. And now today, I have some brand new information. How does that sound? Let's begin. First things first, here we go. A growing share of working Americans don't think they will ever retire. And so you could say, well, that's good, right? They don't want to retire. They want to keep working. But why? Well, 29% of workers under 55 answered a retirement query with, I don't think I'll ever retire. And why not? Because they couldn't afford to stop working. This is not something where they're saying, I want to keep working. I want to enjoy work. This is what I want to do. I don't want just, to sit at home and do nothing. I want to work. No. They can't afford it. So we know prices are high. We know that people can't pay their bills. We've got that. Okay, let me show you. Here we have an economic indicator that I will continue to highlight here on the channel, Maersk. This is the biggest shipping company in the world. Now, they reported robust second quarter financial results in difficult market conditions. So they said their bottom line was good, but the conditions were difficult. What are we talking about? Well, they forecasted long and deep contraction in global trade. This is the biggest company in the sector. So when they say this, that's not good for their stock, right? They're not going to say something like that unless they had to admit it. Container Shipping Group says companies are still cutting inventories, and that's where we start to get real messy, because this is a good indication of what's happening in the economy. If the consumer is buying lots of stuff, we're going to see that showing up in the amount of containers that are being shipped over. But that's what's happening here. As you can see, the prices have really come down. All the different container shipping rates from one place to another, those have all come down over the years. But now something has changed. And you could see those have started to elevate just a little bit off the bottom. And what this is all about is that we have started to see the actual, these companies have less availability. They're not putting as much out there anymore because there's not as many orders. So that's creating an intentional supply and demand fundamental imbalance. That's what's going on. We know that there isn't as much stuff being ordered, but the consumer is pushed to the edge. And remember very clearly, I'm telling you about something, a pattern that has been disrupted. And that's going on right now. Right now, brand new information. Let me get into it, okay? Here we have it. So key, so huge, and that's going to lead me into the next part of this. Revolving credit monthly change. Suddenly, the consumer, after month after month after month after month, all the way back into 2021, they were spending more on their credit card each and every month. Suddenly, they can't do that anymore. Well, what's happening? What's going on with the consumer? What are the changes? Well, you can see something very clear. Now we are at this moment in time when the consumer needs to, number one, with the car loans, they're paying more than ever before. That is increasing. The rates at which they're paying have increased. But the student loans, 3 years of not needing to pay them, now they've got to pay back. The average would be $400 a month. They didn't need to pay it before. Now they're going to start paying it back. So we have a big issue going on with, number one, the consumer suddenly now not putting as much as they did before on their credit cards. So just a rapid, sudden change. And then we have this coming at the same time where the car loans have accelerated quite a bit. And we also have, of course, the student loans requiring to be paid at the same time. Let's be honest, interest rates have skyrocketed on these credit cards, 22%. So people are not utilizing them to the great degree that they were before. At least right now, the data that we have, this could change in an instant. Who knows? That could be just 1 month, a blip, a big change. But in terms of the debt, we could see at 22%, people don't want to expand their debt. Maybe they started to pull their home equity line of credit. Maybe they're using other forms of debt. But the credit card right now is not in expansion mode. We'll see next month. We're going to get that data. Those are all from the Federal Reserve. So we get that and we pull it. Now, I got to ask you something. Do you know the funds? Well, even if you don't know the funds, do what the funds is doing and give that video a thumbs up. I'm digging the deepest I possibly can to bring you the latest and greatest. What I ask is that if you found it informative, hit that thumbs up button so that you could support me. Are you interested in some more? I'm going to get into the biggest crack right now in the economy. You see what's happening with the consumer. You see all of this, right? I've made it very clear. The big change that's occurred. Well, now something big is all surrounding us and what we're seeing. And I want to show you a couple points. You can look at it. The food prices have escalated once again, mostly because of the vegetable oils. All I'm trying to say is that the consumer is real cash strapped at this point. And Wilko, well, these Wilko stores are at risk of closing down as high street retailer on the brink of administration. You could see this, 12,000 jobs, 400 stores. This is the UK, but just one example of many, how many different companies, how many people are being affected because of all that we are witnessing, okay? The consumer is not healthy. Inflation is still high. All of these things are a problem. But we have to think 2 steps ahead. The average YouTuber doesn't do that because that is not good for the views. But I am here to bring you 2 steps ahead. I'm always showing you 2 steps ahead and trying to remind you of what is 1 step ahead at the same point. But if you don't know 2 steps ahead, you do know a chess player that just plays 1 chess move ahead? That's an idiot, okay? You've got to be 3, 4, 5, 6, 8 moves down, or else you're not going to ever win a chess game. And so that's what we're dealing with today, where the average person is a lemming, is a sheep, where they're simply following the person in front of them. You don't want to be that. You want to be informed. You've got to know 2 steps ahead. In the terms of chess, it's a little different. In the economy, if we know 2 steps ahead, we're going to be all the way advanced. We're in the 99th percentile. Okay. And that's what I do here at this channel. I hope you appreciate that. Okay. I talked about this. I pinpointed the exact bottom of the stock market last year. I pinpointed that. I showed you that just recently again. When we look at the data that comes through, I am able to tell you what happens because I'm looking at things like the money mirror method that these other guys, they don't have this. And I want to give you all the details. You got to stick with me, okay? Big news coming. As you see, Moody's cuts the US banks on mounting funding costs and what I want to talk about, office exposure. Now we're getting dirty. It's not good. Look, Zoom asks employees to return to the office for the first time. I thought it was funny that the company that's really like everybody, oh, Zoom is the most amazing company in the world. I remember this in 2020. The stock was worth more than ExxonMobil. The Zoom stock was worth more than ExxonMobil. I brought that up. I said, this is stupid. This is not going to last. And I was laughed at. I was told I was an idiot, everything. And now what do we got? Right? Okay. Here we go. You could see that. I just found it funny. But we have what is really important, and that is vacant offices. San Francisco at the top of the list. Then you can go down New York City, Austin, even on there as well. But the point is, you've got a lot of these big cities, they're not filling in their office space. Morgan Stanley analysts think commercial real estate is heading for something worse than the great financial crisis. And the point here, this is actually from a little while ago, but the point is that a lot of these places that you can't get around this. There is just not, that the demand just isn't there. And I was just watching a piece from the Wall Street Journal, a little video clip about how they convert in New York City specifically, how they convert office real estate into residential real estate. And it is very difficult. In fact, most of these things can't be done. So don't expect, the whole thing. It would be nice actually maybe do a video showing you while I'm in the corner, sort of just breaking it down. But it is very important that it takes a lot of money. And I think it's something around $300-400 a square foot just to get it up to where it needs to be for the buildings that it does work in. So imagine the cost per square footage that they want to sell that to the customer after. This is not something that's going to be affordable. In no way, shape, or form is there affordable housing coming on the market, even with this ugly real estate that nobody seems to want. It's like, somebody with leprosy. They don't want to touch it. And that's what we've got. Well, we got a big concern because look at this. The delinquency rate of the commercial mortgage-backed security. So they take all these commercial mortgage-backed, these mortgages, they take them on the commercial side, package them up into securities, okay? Little nonsense investments, put that in a little bow, put a little bow on top of it, sell it to investors. Well, now we are at 4.41% in July of 2023, the highest level since December of 2021. It's getting real messy. Here we go. Delinquency rate by property type. What about that? Office real estate. Office real estate, 4.96%. You got a problem. You got a big problem. You see that? Look at where it was 12 months ago, 1.62%. Do you see the trend? This is extremely worrying. You stated to this point of the video, if you haven't given me a thumbs up yet, I deserve it at this point. Look at that trend, 1.62%. Now we're at 5%. And we don't think you need 20, 30, 40, 50% to be a crisis. No, this is already a crisis. How are they ever going to turn this around? In commercial real estate, it works a lot different than residential. Don't think residential, okay? It's a whole different story. And by the way, also look at the trend in general moving up, okay? All of them are seemingly moving up here, and that's a problem. That's a big problem. You've got this going on. Residential real estate, not really a factor in this respect. Super low inventories in some cases. There could be problems for sure, but before we even get into those, we're looking specifically at office real estate. Terrible. Retail is another big one. You don't want to touch this stuff with a 10-foot pole. I wouldn't touch it with your 10-foot pole, okay? This is the worst thing. Stay away from it. If you are invested in real estate investment trusts, watch out. Take a look at where the money is. If it's in multifamily, different story. Although multifamily is, not doing the best right now, I wouldn't want to put my money into it. But I'm watching. I'm paying attention to that. At the same time, we got to look at this and just realize where our money is at and be very careful about this. Very careful. Look at the delinquency rate. You could see it on a chart form very clearly. It's office real estate has really taken off the delinquencies. Why? Because they can't do it and they can't convert it. So that's the big thing. Not only is it unloved, not only are a lot of these companies moving out. I mean, look at it. They are at 49% in the whole work from home thing. 40. So half of these buildings are empty at any given moment. Still today, half of them. Okay, when you look at the major cities in the US. So you've got a problem fundamentally that cannot be fixed, will not be fixed when half of them are there. They can't convert it. They can't convert it to real estate, residential real estate, which is where they need it. They need more affordable housing. And if they do, it's not affordable housing. It's still expensive. And what they talk about, luxury rentals and so on. So you're going to have like a big investors that come in, they redo the whole building, they convert it to rentals, and they charge you $4,000 a month for rent. Not affordable, not what the average person needs right now. So you see, we've got a big issue going on. Office real estate, disgusting. Retail, disgusting. I don't want any part of that. Okay. But this is where we're at with interest rates this high. So you watch the interest rates, and this is going to be a big determining factor. What is interesting about commercial real estate, which is why I'm telling you all this, is that usually it's shorter term debt. So that rollover period happens frequently, unlike residential real estate, which is, hey, I'm just going to hold on. I got a 30-year mortgage. I'm just going to stay put. I'm not going to sell so that inventory drops, right? That's what goes on. But they may just hang on. So this is the issue that we are dealing with right now, right here today. If you want to know more, you've got to check out the Discord. 1,000 people are in here. And I want you to come on in where you can say hi, where you can get some tips about real estate, about investing, about the money mirror method, and how I'm able to determine what goes on in the markets before I see them talking about it in the news, okay? It's not me because, oh, I'm so special. No. I'm willing to be a blank canvas, unbiased, so that I can bring that to you as a truly unbiased source of information, which generally doesn't exist. And so that's why I bring you this. It's not a popularity contest. I am here for you. I hope you appreciate that. If you did, share this video. I think it is really, really simple stuff. And don't forget to join the Discord right down there. 1,000 people are in this group, and I want to hear from you. When you come on in, say hi, and I'll reply to you, okay? I'll see you there. Take care.